Good morning, everybody. Welcome to another exclusive interview at Value Investors Edge Live. This morning, we're hosting Star Bulk Carriers. Specifically, we have the president, Hamish Norton, co-CFOs, Christos Begleris and Simos Spiro, and the head of research, Konstantinos Simantiras. Good morning, gentlemen. Thank you so much for joining us.
Our pleasure.
Good morning, Jay.
Yeah, it's excellent to have all you gentlemen with us today because the dry bulk markets have been very dynamic and very interesting over the past year. Rates have been fairly close to break even for a lot of companies. I know Star Bulk has been able to beat some of those index averages, but it's still been pretty challenging. But the rates have recently tightened a little bit. What's going on in the markets right now? Can you kind of summarize some of 2023 for us?
It's indeed that the spot rates during the last month have experienced a strong improvement. Capes now have increased to close to 25,000 per day, with the Atlantic at even higher levels, closer to 30,000. And the smaller sizes, especially during the last 2-3 months, they've increased on average, I would say, by slightly more than 6,000 per day. And now they're earning something in the mid 13,000 on the Panamaxes and the Supramaxes indexes. The reason behind the increase is definitely has to do with seasonality, where we are currently at the strong part of the year where ton miles of iron ore, coal and bauxite and miners and operators are competing for vessels at the same time. And this usually takes place during the last 4 or 5 months of every year. At the same time, after a terrible first half in terms of supply, we had huge supply downward pressures on rates because congestion was correcting lower from the record highs of the 2022 period. Port congestion finally appears to have normalized over the last quarter, and it's relatively flat and it's slowly picking up actually on certain regions. We see a strong decrease of steaming speeds, which is supported by the very high oil and bunker cost environment, and also, new environmental regulations incentivizing owners to maintain a low speed. And it's interesting that, during the last few weeks, although rates are, spiked higher, speeds have continued to stay at low levels. So this might be an indication of a more sustainable recovery, at least for the fourth quarter.
Yeah, we'll hope so. I mean, it's been a challenging year, so it is nice to see the rates finally showing a little bit of strength. A little bit bigger of a question, any commentary on China's reopening and sort of hits and misses regarding how that is impacting the dry bulk market?
Yeah, well, the China reopening, I think, and the recovery from COVID is one of the strong bullish medium-term factors that we still wait to play out. The lack, actually, of a strong Chinese reopening in 2023, and especially the continued weakness of the property sector, has affected mainly sentiment for dry, and definitely has had a negative impact on the forward curves and on public company valuations. However, if you look at the statistics, Chinese imports of dry bulk products this year have been extremely strong. Volumes increased during the first 3 quarters of the year by 14%. And if you look at coal imports, they've jumped to the tune of 80%. And this is also a very strong recovery on the minor bulk front. So it was mainly the rest of the world actually slowing down and affecting dry bulk trade on the demand side this year, where I think trading from the rest of the world was down by approximately 3% during the first 9 months of the year. So let's see. I mean, I think that the property market is more likely to recover as of 2024.
And effectively, supply was up because of the collapse in port congestion.
Of course, yeah.
A great point there. And Hamish, now that I got you on the line as well, I think this is probably a question for both you and also probably Konstantinos, because it's still kind of research focused. We talked about some reasons to be optimistic. We've talked about some of the dynamics. What are some of the overall biggest risk factors in a dry bulk investment at this stage of time?
Well, the biggest risk factors would obviously be, some sort of financial collapse in China triggered by Evergrande and Country Garden. But, they've managed to avoid that pretty well. And, Evergrande has been a financial collapse threat now for the better part of a year. And yet it seems to be sort of gracefully winding down. That's not something that would have been easy to do in a market economy, but the Chinese seem to be pulling it off. And another thing would be a collapse in oil prices. But, with oil, frankly, not being particularly oversupplied, and I think with no prospect of oil being in oversupply, an oil price collapse that could drive charter rates lower seems very unlikely.
I agree with Hamish. I mean, biggest risk factors, definitely Chinese potentially entering a prolonged period of contraction, unlikely, but given how close COVID is, and oil prices would probably be the two biggest factors.
It certainly makes sense that China and their resulting impact, whether or not its economic growth and strength has kind of reflected, right, in oil prices, or it's the opposite end of the collapse, their version, right, of the GFC would certainly be something that keeps me awake in any shipping segment, and especially dry bulk. I do want to give you the final word. There's a lot of dry bulk companies out there. There's many more of them coming out of the woodworks. What differentiates you from many of these peers, and why should investors consider Star Bulk?
Well, I think our biggest differentiator is corporate governance. We run the company the way you would expect a US listed company to be run. Everybody you're talking to on the call is an employee of Star Bulk. The people who run our ships are employees of Star Bulk. We have a serious board. Oaktree has a couple of seats. Arne Blistad, who's a big Norwegian ship owner, is an investor and has a seat on the board. Raffaele Zagari, who's an Italian ship owner, is an investor and has a seat on the board. And these guys know all the tricks in the book, which if you look at other shipping companies, you won't see that anywhere in the world. The board basically believes in paying management when shareholders make money. And so we're incentivized to think and act like shareholders. We are shareholders. And, as a result, we've got our operating costs down to the lowest in the industry. We've got our overhead down to the lowest in the industry, and our chartering results are excellent.
And just to add to what Amy said, we are also the largest of the US listed dry bulk player with a market cap of close to $2 billion. And also we trade on a daily basis approximately 1 million shares, which means a value of around $20 million per day, which is again the highest amongst our peers. And we have a track record of doing accretive transactions for our shareholders, whether this was the recent buyback of shares from Oaktree, or whether these have been the acquisitions that we have done in the past by issuing shares at or above net asset value at a time when we're trading below net asset value. Therefore, we like to think of ourselves as out-of-the-box thinkers. And as Amy said, we're always trying to maximize shareholders' value.
Yeah, as potential shareholders and investors on the call, those are the magic words we love. And I think in a commodity industry, two of the most important things are corporate governance, number one, and scale, right? And structure, number two. So certainly makes sense. And thank you, everyone. Thank you, gentlemen, for taking time out of your day to come answer questions for us.
Thank you,
Quite
Jay.
welcome.
Thank you.